Our next guest predicts the dollar may be on track for its best year ever. Let's bring in Jens Nordvig, founder and CEO of Exante Data. Jens, great to have you with us. There is some thought that the dollar index, is so extended at this point. There's got to be a limit to this, and that we're closer to the top than we are not. So I'm just curious, how much farther do you think it can go?
Well, so we've been in a situation where we essentially had the dollar firing on all cylinders, right? The dollar is typically strong when global growth is weak. Global growth has been weakening this year, right? Then we've had the Fed kicking in, getting very aggressive. We have a European energy crisis, which has really damaged all European currencies, which are among the most important currencies in the world. And then what we've started to see over the last 3-4 days is that it is not helping the other currencies, even the other major currencies in the world, that interest rates in their economies are going up. So this is something that is new and very dramatic. UK interest rates have exploded higher, and look what happened to pound sterling, right? So this is a kind of an emerging market currency dynamic that is starting to impact currencies that are not supposed to be emerging market currencies. So that's a very, very big deal. And this is what is causing this fresh leg in the dollar that essentially is making the dollar go to levels that people would have thought were not possible even a couple of weeks ago.
Hey, Jens, it's BK. So we see on the Dixie, on the dollar index, when it gets to somewhere around 120, that's where we've had major crises in the past, great financial crisis, those type of things. Do you see this environment where these moves in currency start to cause real economic damage and real economic crises?
Yeah, like if you think about what's happened in the United Kingdom in the last couple of days, right? We essentially really cannot find any other examples where the yield curve is moving as fast as it is, right? So this is causing incredible monetary tightening in a very short period of time. So this is a historical thing that's going on. So we have to sort of just recognize that it's very hard to find examples of this happening in history. And it's all about inflation. We have not had inflation, right, for several decades. And all the policies that were possible in a low inflation environment are not possible, right? So when the bond market starts to misbehave, normally you would have the central bank coming in and calm it down somehow, maybe buy some bonds here and there, but that's going to go against the inflation fighting, right? So it's like the central banks have the hands tied against the back in this environment, and that's why the market volatility is so extreme and why it's very hard to say, okay, this specific level of the dollar here, it's enough. We are going through what people thought would be the max, if you ask them, very, very, very recently.
So we've not seen this before. So I'm just going back to BK's question, Jens. Do you have an answer to it in terms of what is going on and whether that actually causes financial crises? Because it's not just Europe. I mean, you take a look at what's going on in Asia as well, with the yuan and the yen hitting new lows as well, and their major trading partners in that area. And what's going to happen? It just seems like there's so many hot spots around the world, with currency as sort of being the ground zero.
Yeah. No, so I think you're asking exactly the right question, in the sense that we've had a situation where it was clear that we were going into a situation where we were going to have weak economic growth, maybe a recession on the cards, but we didn't really have financial crisis type of dynamics, right? It was not 2008 and that type of instability around financial institutions and so forth. But what's going on in the last couple of days is that the price action in the bond market is getting, I would say, disorderly. Maybe not in the US yet, but certainly in some other big global bond markets, the price action is getting disorderly. And that is something that's going to be a problem for major financial institutions and so forth. So we are morphing from economic trouble into financial sector trouble right now. And that's what's new about the MU, and that's why we have to be open-minded that we can go further than people thought a couple of weeks ago.
Jens, great to get your insights. Thank you so much.
Okay, thank you.
Jens Nordvig of Exante. Brian Kelly asked Jens about whether or not the dollar index has hit, close to highs. You are sort of in that camp that it's so stretched that there's got to be a sort of a limit to how much it can move higher. Have you changed your mind at all listening to Jens?
No, I mean, I guess what I'm saying is, this dollar has been running for a bit. We are in the early innings of a currency crisis, as Jens pointed out. So you need to stop thinking about, okay, is it now time to start put dollar trades on and think about where this ends and how it ends. That's why I asked, are we headed towards a crisis? Because usually in a crisis, central bankers and governments, they make 3 or 4 mistakes and then figure it out. So that's more what I'm thinking. I still think, as I said last week, these currency markets are on the edge of going parabolic. We saw it with the British pound. We'll likely see it with the yen, and I would not be surprised to see it with the euro before this is all over. So this is a deep end of the pool type of trading, though. This is not for the home gamer to try to get into and say, oh, I'm going to call a top or a bottom in the dollar.
Yeah. Good.
So if you can, see, the problem is you have to have a clear view on the dollar for me to have a clear view on where the markets are going. Because if you look at these charts, they're clearly taking their first move from rates. We all agree on that, right? Rates are pushing around. That's the elephant in the room. So if you could figure out the dollar, you could figure out the market. So if you think the dollar, to BK's point, is close to topping out, I think you have to get a capitulation event in the dollar, in currencies. But by proxy, it's got to take its lead from rates. If you could figure that out, then the market has bottomed. I think we're probably, BK said it before, we're probably 10% away from a bottom, and that's where things get messy, squishy, and everything else. I do believe that the midterm elections are the only tailwind for the market, so this next month could be a little hectic and a little crazy and test our own strength.
Guy, if you're just listening to Jens, it's sort of, I don't want to say scary what he was saying, but, to be on watch for financial crises sparked by what's going on in the currency market, that's frightening to say that there has been no playbook before for these kinds of moves and the impact. That's scary. At the same time, for the U.S. stock market, we don't often pay attention to currency only because the theory is that you look through currency moves when it comes to the impact on revenue. Are we going to hear that again, or are things different this time?
No, it's not. No, absolutely. And listen, I watched you again on the Squawk Box this morning. You brought it up. I mean, Microsoft warned on currency 6% ago, I think, in terms of the dollar. I might be off by 0.5%. Don't at me. I mean, it's coming again. And, it's interesting you mentioned demand. And these currency moves are historic. I mean, I used to do this for a living back in the 80s and 90s. And if a currency moved 1% or 2% over the course of a couple of months, you'd be doing back handsprings, which I could do back then. Now they do it in the course of seconds, as Steve said earlier. It's broken. And again, I'm a Fed hater. Absolutely proud of it. And so you want to blame a group of people? It's the central bankers who think they can orchestrate all. That's what we're dealing with now. But in terms of the ramifications for the market, yeah, companies going to warn on currency. Absolutely. And again, I don't know if we're in a recession because I'm not an economist. I say it all the time. I'm not smart enough nor humorless enough to be one. But you know what we are on the brink of? An earnings recession. Without question, you're going to start to see companies ratchet things down in this environment.